China is reopening, but was their hand forced? Coming up here on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 9:08 here in the middle part of the country on Thursday. It is December 1st, 2022. Here's your morning jog around the economic headlines of the world. Want to start off with China finally loosening its COVID rules after a couple of weeks of protests. But was it the protests that caused the Chinese government to loosen their COVID restrictions? Methinks not. Here's the deal. China's been building hospitals for months to prepare for this event. And ultimately, these protests were really a super spreader event where the virus in China, COVID, is starting to get out of the control of the government, right? If you have zero COVID for long enough, you have enough super spreader events, eventually you just lose control of it and you have to say, hey guys, by the way, it's our decision. We're reopening the country, even though your hand's kind of forced here. But here is the important thing for everyone that has sold off energy over the last week, all of the bearish portfolio managers that are saying, China reopening is not happening and it's not going to be a full reopening. Ultimately, here's what it means. Politicians lie. They're like coaches in the NFL. You don't listen to them when you're starting your fantasy lineups because they lie. Look at what coaches do. Look at what politicians do. Chinese politicians were building hospitals for months to prepare for when this time eventually came, whether they decided it or whether science decided it by way of thousands of people getting COVID-19. So when you go back and when you evaluate news, always remember, and this is important when you're managing investments, especially when you're managing investments that matter. Politicians lie. Look at what they do, not what they say. You will have much more success. Speaking of some contentious numbers, U.S. Core PCE coming in a little bit lower than forecast. It's almost like inflation is subsiding, and quite frankly, this is what the Fed wants. It's sort of we're looking towards, and I might even say it out loud, a soft landing, where the economy may go into a small recession, but is not killed by inflation, and perhaps the Fed even did their job. Now, does that mean they should not have started earlier? No, it does not mean that. Does that mean that they're going to get it exactly right? No, but it does mean that things are directionally correct for the folks who want this economy to survive most. Last but not least, before we get you off to a nice Thursday, the EU is setting its Russian oil cap. The EU is setting its Russian oil cap here at $60. That is a fair level. Now, of course, Putin's come out, says he won't comply with any country that is setting a price cap and will not trade with any country that is following a price cap, i.e. China and i.e. India. He doesn't have a choice, right? Those are his export markets and he has to offer a discount. Quite frankly, Urals barrels are already trading below that price. If energy keeps going northward, that price may have to be modified significantly upward. Listen, at some point, push comes to shove and Russia will shut down production, right, to just double their actual black market price. They have that card in their hand. Ultimately, what first world countries are trying to do with this price cap, take some profits away from Putin, but keep the oil flowing so the worldwide price doesn't skyrocket. That is the needle they are trying to thread. Quite frankly, this policy probably is at least directionally correct in doing that. Again, we have 4 days until the EU goes and bans Russian crude oil from coming directly to the EU, at least via ship. That is what I'm looking forward to. If you want some additional info throughout the week, feel free to find me on the internet. I'm out there. Until then, you, your family, hope you have a really good rest of your Thursday. I'm out.